here. Now, let me start by explaining that the Future Moves Group is a management consultancy, but of a different kind of streak than you would have encountered conventionally. We apply foresight, which means we look at the future, we try to anticipate what we think is going to happen and work ourselves backwards to help our clients make better decisions today, with the objective of trying to shape the direction of that future in a more advantageous way. We're located in Singapore, but we do quite a bit of work around the world, and including here in the UAE. And the book that Richard referred to is available for you to buy online, but it describes our methodology. And today I'm going to be talking about data and decisions very precisely under the rubric of that grand title that Richard mentioned about smarter payments. And I'm going to be talking about the role of government in relation to the future of the universe of payments. There are three main drivers of change that I think that's really important that we come to grips with, because they are already manifesting themselves today. The first of which is what I call analytical singularity. What this means is that where before one would look at analyzing data on a very large scale in aggregate basis or on a very granular basis, you couldn't do both. But today, with the power of machine learning, large scale computational numbers can be undertaken both on an aggregate basis and on a granular basis. And the insights from doing both at the same time cross-feed into each other. And I'll show you an example of what I mean later. It's a project that we did for the Singapore government. The second is what I refer to as technology-driven complementarity. Historically, governments could aim for effectiveness or they could aim for efficiency. There's usually a significant trade-off between either choice. Again, machine learning and large-scale computation is allowing governments to be able to achieve both efficiency and effectiveness gains with the same tax dollar investment. And that's a significant game changer, Again, I'll show you an example of what I mean later. Effectiveness and efficiency don't have to be traded off against each other in the same degree as it used to be. And the third, and really exciting, something that previous speakers have alluded to, but perhaps not described with this kind of specification, is technological autonomy. Technological autonomy is a step removed from being empowered by technology, which a lot of the conference today is about. Technology helping us make payments better, safer, and so on. Technological autonomy is when the technology is making decisions about payments for you. You pre-empower surrogates to represent you in the universe of payments. And that's a whole different ballgame from simply having technology help you make better decisions. This is technology making better decisions for you. Now, the journey that we've taken to come to this point is something that will be quite familiar to most of you. In the 1970s and 80s, we started with data management organizations. This was all about storing information, categorizing information. The buzzword in the 1990s was knowledge management. It was all about taxonomy and vocabulary. And then in the last 15 years, we've moved into trying to mine all of this categorized information for insights. A lot of what you see outside in the showroom is really built on the notion of finding insights from data. But the next stage, the one that we are already embarking on, but we're seeing the edges of the horizon and we're moving more rapidly into it, is data analytics. Data analytics is going beyond insight to empowering you to be able to preempt. And preemption is the next horizon. The ability to anticipate demand, anticipate decisions, and be able to act on that anticipation in a timely enough way that the situation doesn't arise. Moving the decision point for a future moment into the present space. Most of you would have already heard of robo-investing, something that I think we are beginning to understand brings challenges and risks as well as convenience. These are where algorithmic systems make decisions on investing on your behalf, where you think that you may being advised by a human being. You're actually being not just advised but acted upon by a fully autonomous system that's pre-programmed to achieve certain outcomes. Now, last year, the Future Moves Group undertook a pioneering study for the Singapore government to try to use data analytics to help make public policy move from where we had been targeting it, which was what we call citizen-centric, trying to make the policies all about improving the lives of citizens in an aggregate basis, to citizen-specific policies, where we could target an individual person, unique identity with a cocktail of policies. And this is pioneering not only in Singapore, it's pioneering globally. And what we developed for the government was a risk profiling model. This is a screenshot of the back end of the system, where entry of administrative data would allow for the identification of who was at more risk at a social level, at a physical level, and at the financial level. And the specific policy is a $7 billion policy designed to introduce healthcare subsidies for the elderly in Singapore. The elderly. $7 billion is not small change. And it's all about seamless payments through the government healthcare system. So the citizen would be unburdened of having to make choices when those choices have to be made under disadvantageous conditions, because they would only have to tap those subsidies if they were falling chronically ill. This system allows the government to try to identify who is most at risk and what are they most at risk for, and provide an intervention that's targeted to that person and to that risk. And we developed a dashboard system that's operational nationwide to allow for managers at the national level, at the district level, and the precinct level to be able to monitor, review, and also model out mutations to the policy to see how it would work under a costless system. A costless system is where you're not putting anyone at risk by introducing the policy without first experimenting with it. And because the system has built in learning from engagements with over 250,000 citizens over a period of a year and a half, we have a rich source of data in which to do the modeling to approximate what we think would happen if we actually did it for real. And this is a leading edge that I think we're going to see more and more brought into the center of decision making and public policy, because the payoffs for getting it right are very high. But the risk of getting things wrong, particularly under democratic conditions, is also very high. So governments need to hedge their risk when they want to introduce large-scale, large number policies. Another example that I can bring to you that is happening in Singapore today is the Development Bank of Singapore's purchase of $100 million worth of time on the Watson computer by IBM. And they're using it to mine wealth management data to look for relationships in decision making by their high net worth investors, high net worth depositors, that are bringing together information, data sets, which previously were not structured together. Structuring the unstructured is a phenomenon where you're trying to associate variables which you conventionally wouldn't. But when you do, you can draw learning, you can draw insights on how to shift behavior, encourage decision making in a preferential direction. Preferential naturally to the company, but hopefully preferential also to their customers. Some of you would have heard of behavioral economics, and behavioral economics is just an expression of structuring the unstructured, looking for where to press the button in particular behaviors in order to move the needle of decision significantly. And we have a video that we'll play in the background for you, which looks at how Singapore is making significant national level investments to prepare the nation within the next 10 years to become truly a smart nation rather than something that is only unevenly distributed. And this unevenness is something that as a small country we can easily overcome. But I think for large countries, where the populations have development on different rungs of the ladder, it's a bit more challenging, but no less vital. No less vital because one of the most important things about the future is to try to avoid a digital divide, where some of the population are at the forefront of technology, others are in the van of technology, and some are just completely left out. That is going to not just create a lack of exploitation of the full potential of a population, but it's also going to create considerable social frustration. People want to all be on the same page when it comes to the future of technology. It's governments working together with the private sector that stand the best chance of being able to roll out technology across a population. Not governments alone, not the private sector alone. And as the barriers of entry for accessing technology reduce, you'll see more and more people come on board, and the kind of ideas that we've heard about earlier today, I don't think that they're very far away. In fact, I think that they come closer and rush faster towards us as we get more and more of the population on board. These are changes which aren't sci-fi. They aren't changes that require us to look in a crystal ball. These are changes that, if you look at Singapore as an example, are already starting to manifest themselves on pilot basis, and once the pilots are proven, they are going to be rolled out nationally. But then what's going to happen is these systems that are being piloted will then be integrated to try to create a complex but efficient and effective delivery of public services, which a large part of it, the solutions are going to come from the private sector. Whereas historically, we depended on the government to come up with its own solutions, the private sector to come up with its own solutions. Now there's integration. Let me give you the example of a new platform that was just rolled out earlier this year called MyInfo, which requires every citizen on a voluntary basis to enter their private details and pre-authorize a growing population of government agencies to tap that information in order to help make efficient the interaction between the citizen and the state. We also introduced a massive new universal insurance package last year across the entire population on a compulsory basis. And this one-time introduction, first-time introduction, required the government to make calculations, estimations of risk on health of every citizen in order to calculate premiums and subsidies. And all of this was done using a significant technology that had to be created at the back end, which only required the citizen to confirm 3 or 4 basic information about themselves and about their households. Everything else was auto-calculated, and the citizen was presented with a statement saying this is how much you have to pay and these are how much subsidies you're going to get. And each of these calculations were done on an individual basis, something that we would never have been able to do 10 years ago. A final example, this is a virtual map of Singapore, and it's been done by the government together with the private sector, but made available for free to private sector SMEs and startups in order to pilot and trial the introduction of near-field technology, introduction of cellular technology, to test out whether and how it would work under virtual conditions, thus massively saving and reducing the risk involved in introducing this technology in an already built-up urban environment. I mentioned surrogates earlier. Let me come to this final part of my discussion, which is about the notion that technology is going to just not do things for us, it's going to be us. Technological surrogates are where we preload our preferences, our biases, our interests into systems, and these systems we authorize to act on our behalf, make purchases, conclude deals, make appointments. These are just the low-hanging fruit of what's available. But if you think about it, getting to this point is not a technological challenge alone. It's a challenge of overcoming certain hurdles that are social hurdles and cultural hurdles and legal hurdles. The first and foremost, and you heard many speakers talk about security, is building the trust factor in systems that they can act on our behalf. Security, being able to know what's happening to your data. The infrastructure, the government has been to be able to carry the technology load, moving beyond traditional wiring to fiber optic, moving from fiber optic to broadband cellular. All of these need thinking ahead to anticipate demand. And governments need to be able to put in place these long lead investments today, not tomorrow, in order to be able to catch the wave. Without these investments, in including soft investments, soft infrastructure in legal institutions to evolve regulatory systems to be able to manage and govern these new technologies, that's going to be vital too. So my message, let me leave it with you, is that the future is already here. None of what I'm saying and sharing with you is about things that haven't been invented. It's only about things that we haven't invented enough uses for, and we haven't invented enough conditions to bring as many people on board as we can. And once it reaches critical mass, what you'll find is a J-curve effect. Not only will these innovations come together, but they'll start to speed up and accelerate each other. So I think the future is really exciting, not just for payments, but they're really exciting for governments to be able to innovate their thinking about how to manage technology in a meaningful way for their populations. Thank you.